Welcome to the Dinar Daily. We are tracking a significant and extraordinary story that is rapidly circulating across international financial forums tonight. A narrative that, if true, could reshape the entire global financial map. A series of reports has emerged claiming the Vietnamese dong, a currency long noted for its stability, has just made one of the most substantial overnight moves in modern history. We want to be clear that we're analyzing these circulating reports as they are developing. The narrative claims this is not speculation but something happening right now, with the dong's purported and powerful jump in value allegedly sending shockwaves from Asia to Europe and the United States. According to these accounts, traders are stunned, economists are recalculating, and global investors are racing to understand what has just been reported. Today, we are breaking down the full story behind these claims of Vietnam's surprise currency surge. We will examine the details of this circulating narrative, why it supposedly happened, who is allegedly behind it, what it is said to mean for world markets, and how, according to this same storyline, it could be connected to the next potential move for the Iraqi dinar. What is being described in these reports about Vietnam could be interpreted as a major financial turning point. Late last night, according to these accounts, international currency tracking platforms began to light up with what were described as strange but powerful signals. The Vietnamese dong, or VND, reportedly started showing an unexpected and sharp rise in value against major world currencies, a development that took many by surprise. At first, as this narrative claims, many traders who saw these signals assumed it must have been a technical glitch or data error. The stability of the VND has been a cornerstone of its economic policy, so such a dramatic deviation seemed implausible. However, the story continues that within hours, multiple reliable market feeds were supposedly showing the exact same upward spike. The claims state the dong's exchange rate against the US dollar suddenly jumped from its stable range of around 23,500 to levels as strong as 18,000. Furthermore, this narrative alleges that on some private trading screens, even more dramatic rates of 15,000 or 12,500
per dollar are being displayed. This was not a small move, it was a major leap, as the data continued to update across Asia and Europe. The reports claimed that confirmation began to roll and that this was a real event. According to this narrative, the Vietnamese dong had just made its biggest single night move in more than a decade, shaking confidence while also sparking curiosity and excitement all at once. The big question at the center of this story is, why would this happen? And why now? To understand the reasoning provided in these reports, we need to look at what this narrative claims Vietnam has been quietly building behind the scenes for months. The country's economy has been a subject of much positive analysis, with manufacturing, exports, and foreign investment all reportedly surging beyond forecasts. This storyline points to the well-documented trend of major global brands shifting production from China to Vietnam. This shift, according to the narrative, has massively boosted Vietnam's industrial output and strengthened its trade balance, giving the country a much stronger economic foundation than its currency value might have previously reflected. Meanwhile, the reports also highlight that the Vietnamese central bank has been steadily and quietly increasing its foreign reserves. These are the funds a country holds to support its own currency during times of global shifts or to manage its monetary policy. This accumulation of reserves, the narrative suggests, gave Vietnam the power to strengthen its currency if and when the timing was right. It appears, according to this circulating story, that the moment has now arrived. The narrative claims that insiders have been whispering for months that Vietnam was preparing for what is called a controlled revaluation of its currency. Last night's reported spike, in this context, is being presented as the first public proof of this private plan being put into action. This wasn't a market panic. The story suggests what a deliberate, strategic move by the country's monetary authorities to bring the currency's value in line with its new economic strength. The reports argue this was a calculated decision, not a reaction, reflecting a position of confidence and meticulous planning. Another clue presented in this narrative that this was not an accident came from the timing of recent system updates. The reports make a very specific claim: Just 24 hours before this alleged currency spike, several major Vietnamese banks apparently went into scheduled overnight maintenance, while routine maintenance is common.
The timing is being flagged as highly suspicious by observers. These system updates, the narrative explains, often involve adjustments to the digital rate tables, which are the exact data feeds used to update currency values across all online platforms, ATM networks, and institutional trading systems. This proximity between the maintenance and rate change is presented as a key piece of evidence. What's even more interesting, according to this storyline, is that banks in other major financial hubs, specifically Singapore, Dubai, and the United States, also reported similar back-end maintenance during that exact same time window. The narrative pointedly asks if this is a coincidence, then concludes it is unlikely. Market watchers, according to this story, believe this was a coordinated update across multiple international banking systems. This is being interpreted as a clear sign of preparation for something significant, a pre-planned event. The narrative concludes that when rates suddenly change immediately after such synchronized maintenance, it strongly indicates an intentional and controlled revaluation, not a random market fluctuation. As the sun rose over Asia, this narrative claims the financial world woke up to a scene of chaos and immense curiosity. Vietnam's dong had just surged, and now other markets were beginning to react. The story describes sharp movements in the stock markets of Tokyo, Singapore, and Seoul, as investors and funds were forced to recalibrate all of their positions based on this new reality. A stronger dong changes the financial landscape for all of its trading partners, requiring an immediate recalculation of risk and opportunity. Commodity prices also reportedly shifted, with gold ticking upward as investors sought stability, and oil futures adjusting slightly in response to the new economic data. Across social media, the reports claim the phase Vietnam went first began trending. This is a critical part of the narrative, as it implies this move is not just about Vietnam but is the start of a much larger sequence of events. The story suggests this development sends a powerful message across all developing economies, a signal that currencies perceived as undervalued are finally beginning to reflect their real, underlying economic strength. For Vietnam itself, the implications described are profound. It would mean cheaper imports for its citizens, much stronger buying power for its population, and significant new leverage in international trade negotiations, as its economic footprint would have instantly expanded. But for the rest of the world, and this is where the narrative broadens, especially for other countries that are perceived to have suppressed or undervalued currencies, this event in Vietnam could mark the beginning of something much larger. Vietnam's rise, as presented in the story, is more than just a number on a screen. It's a story of a deliberate and successful economic strategy. For years, the country has focused on stability, gradual growth, and attracting international business. It has built strong relationships with partners like Japan, South Korea, and the United States, all while maintaining its own independence from major currency blocs. This strategy, the narrative implies, has now paid off by strengthening the dong. This report claims Vietnam is signaling that it is ready to stand alongside the region's strongest economies. This is a declaration of economic arrival. Some financial experts, according to this narrative, are saying this single move could reposition Vietnam as a top 5 economy in all of Asia by the end of the decade. The timing is also presented as crucial. Global trade routes are shifting, and supply chains are being reorganized in the post-pandemic era. By raising the value of its currency now, Vietnam is supposedly sending a clear message to the world. It is ready to play on the global stage as an equal, not as a follower, in this new economic order. For the average person, this story acknowledges this might sound like distant financial jargon, but the narrative insists that a revaluation by a country like Vietnam affects everything: import prices, export profits, consumer spending, and even international investment flows all shift as a result. Companies that do business with Vietnam, either buying or selling, face entirely new cost structures and must adjust their pricing. Investors who may be holding Vietnamese bonds or real estate could, according to this storyline, see major returns on their positions. This single event changes the financial math for everyone connected to the Vietnamese economy. The regional ripple effect is also a major focus of these reports. Neighbors in the ASEAN bloc, such as Indonesia, Malaysia, and Thailand, are now described as being under immense pressure to respond. The logic presented is that if one major regional player significantly strengthens its currency, it creates a competitive disadvantage for the others. Their exports become relatively more expensive, and their economies might lag. This could force them to follow suit and allow their own currencies to strengthen simply to stay competitive. This is the ripple effect that has financial analysts now watching other countries in the region, and it is also why they are looking at Iraq. This brings us to the connection this narrative makes to the Iraqi dinar community. This story directly impacts those who follow the dinar, as it draws a very clear and direct parallel. For years, the narrative claims both Vietnam and Iraq have been in a similar position, both possessing strong economic potential, vast resources, and a path of rebuilding, but both also having currencies that are considered highly undervalued on the world stage. The story suggests that just as Vietnam has been quietly building, the Central Bank of Iraq, the CBI, has also been quietly restructuring its own monetary policy, modernizing its financial systems, and aligning with international standards. Does that process sound familiar? The narrative implies it should, stating that this is exactly what Vietnam did in the months and years leading up to this alleged overnight move. The reports claim both countries have been under IMF oversight, both have been completing economic reforms, and both have been preparing for eventual rate adjustments. Now that Vietnam has supposedly made its first big step, analysts cited in this story believe Iraq could be next in line. A Vietnamese revaluation, in this context, sets a powerful precedent. It shows that a controlled, upward strengthening of a currency is possible, that it can be stable, and that it can be done with international approval. This is why many in the dinar community, according to these reports, are calling this the green light moment. The story then takes time to explain exactly what a controlled revaluation means. It is defined as a deliberate, planned action by a country to raise the value of its currency. This is done with planning and permission, not as a speculative shock, but as a strategic realignment with the nation's true economic fundamentals. It is presented as being completely different from market speculation or an inflation-driven change. In Vietnam's case, this move is described as being deeply calculated and strategic. By increasing the dong's value, the narrative explains, the Vietnamese government can reduce its debt burdens, attract stronger and more stable foreign investment, and demonstrate profound confidence in its own economy. It's not about quick profits, the story insists, but about long-term strategic positioning on the global stage. If Iraq were to follow this model, the narrative continues, it could bring stability to the dinar, attract a new wave of global investors to the country, and dramatically boost the purchasing power of its citizens. This is precisely why the reported Vietnamese event is being called a domino moment by those who watch for global revaluations. While the world watches these reported developments, the narrative notes that official responses have been cautious. Vietnam's central bank has not yet made a formal announcement as this story is unfolding. However, the reports claim that local sources, banking apps, and foreign exchange counters are already updating to show the new rate values. The story even claims that business owners have shared screenshots showing higher conversion rates and that exporters are already in the process of renegotiating prices for their goods. This is presented as on-the-ground proof that the change is real, even if officials remain silent for now. Meanwhile, international financial organizations like the IMF are also described as being silent, but the narrative claims that insiders believe statements will be forthcoming. The reports advise watching for specific language, such as currency alignment, monetary modernization, or exchange rate adjustment. These are the typical phrases, the story explains, that officials use to signal confirmation of such an event without using the more volatile word revaluation outright. The next few days, the narrative suggests, could bring this official acknowledgement, and that will be the moment global investors are waiting for to act decisively. Markets are now said to be in a holding pattern. Traders are watching for that official confirmation. but many are reportedly already preparing for the inevitable ripple effects. Regional currencies, the story claims, could begin to adjust in sympathy with the dong's movement. Bond markets might respond to the new interest rate implications, and central banks around the world may have to rebalance their own reserves in response to this shift. Even global commodities like gold and silver could see price changes as investors seek safety or react to the new currency alignments. For Vietnam, the immediate reaction is described as mixed. Excitement from investors, confusion among citizens, and silence from officials. One thing, the narrative insists, is clear: the global balance of currency power is beginning to shift, and it's happening faster than anyone expected. If Vietnam's move proves successful, meaning if its markets stay stable and economic confidence holds, it could inspire a wave of similar revaluations in other emerging economies. Countries that have been intentionally holding their exchange rates low to boost exports may now consider strengthening them. It is a delicate balance. The story notes, move too fast, and exports suffer; move too slow, and growth stagnates. But Vietnam, according to this narrative, seems to have found a calculated middle ground. This specific approach could become the new blueprint for currency modernization in 2025 and beyond. It is being described as a quiet financial revolution that few saw coming, but one that everyone is now watching. The narrative also discusses the timing, claiming this did not happen randomly. Over the past few months, it alleges global finance has been going through quiet but powerful transitions. Central banks have been preparing digital currency systems, updating interbank networks, and testing new transaction protocols. Those maintenance windows seen across multiple nations could, the story suggests, be the technical groundwork for a synchronized, pre-planned global adjustment. If that is true, the narrative concludes, then Vietnam's move might just be the first visible domino to fall. This would imply that we could see other revaluations, including the Iraqi dinar, in the near future. For now, the financial community is described as being divided. Some are reportedly calling this a temporary test, a controlled trial run to monitor the market's response. Others are insisting it is the beginning of a full currency reset, where undervalued nations finally rise to their fair market value. Either way, the impact of this story is undeniable. The world has taken notice of this narrative, and investors are shifting their attention as we watch these developments unfold. One message from the report stands out: preparation matters. Understanding these shifts is presented as critical. The story concludes that what is being witnessed in Vietnam could be the beginning of a new global financial chapter, one that rewards stability, transparency, and long-term growth. The next 48 to 72 hours are presented as crucial. The narrative advises watching for official statements from Vietnam's central bank, updates from the IMF, and any synchronized rate changes in nearby countries, specifically mentioning Iraq, Indonesia, and Malaysia. Those, the story claims, would be the confirmation that this is bigger than one nation. The narrative also cautions that with big news comes big risks. Moments like this attract scammers and false gurus. It advises to be careful where information is obtained and to always verify updates from trusted, official sources. Real change, it notes, happens through transparent and official communication, not rumors. In conclusion, the story of the Vietnamese dong's overnight surge has stunned the financial world. Whether this is a controlled test or the beginning of a broader transformation, the narrative is clear. The world's economic order is being discussed in new ways, and for nations like Iraq, this alleged event is being presented as the signal many have been waiting for.